And that should actually bring us back to your spreadsheet. You kindly sent it to me yesterday, so I'm gonna share it. Give me just a second. No, because I got a couple of questions, and I also think
becomes the interrogator.
Nah.
That's okay. You can do that. I gave you permission.
Thank you. Oh, that's so kind of you. Just a second.
Gary, FYI, I agree with your sentiment. I think from your perspective, it makes a ton of sense. I bias towards Tesla's ability to execute long-term against these grand visions. And because I've seen it happen many times before. And I think that's what gives me the advantage as a retail investor to capitalize on these things. If it doesn't work out, then I'm going to be in a much worse spot than I am today. But I feel like I have enough proof. It's kind of like a qualitative approach like Moody's and S&P are taking on Tesla's credit rating. I'm taking qualitative approach on Tesla being able to execute FSD.
And look, it's almost like it's a free option. It's a free option. I can justify a $550 price target without robotaxi. So if it happens, it's worth even more.
Right.
Good. So that brings me to your table. So I tried to understand yesterday. So on the left, you've got the years up to 2030. The first column, if I got it right, is global automobile sales, right? In millions.
I'm going to try to read this while you're doing this. Yep.
But it's your table, so.
I know, but it's hard to see on the screen. But okay, I see it.
You don't have it memorized, Gary?
You okay?
I know it.
Then you got the EV adoption rate, right?
Yep.
Up to, okay. That brings you to the global EV volumes, correct?
Correct.
And then you have a Tesla share, which this year should be just below 20% and then stabilize at 20%.
Correct. And this is the iPhone model. It's the same. iPhone was in the smartphone category, and they kept their share of smartphone pretty stable over the years. And it's about 20%. And this is the same model that when you think about iPhone, the smartphones, basically took over the world from we'll call them the feature phones or flip phones. Mm-hmm. And then they, kept their share pretty even within smartphones.
Okay, perfect. So then those 20% you apply to the global EV volume, that gives you Tesla's percentages, right? So
correct.
Exactly, perfect. And then you have thousands of deliveries. So for this year, you expect 1.41 million, correct?
Correct. And yes.
And then average selling price of 55,700. Correct. And then a gross margin for the automobile sector for Tesla of close to 29%.
Ex regulatory credits. I back out the regulatory credits because they're going to go away at some point.
Got that. Operating margin of 17.7.
Mm-hmm.
And then this is what, 15.5 billion of cash?
No, adjusted net income. So
adjusted it. Yeah.
I don't show every column, but that's the number that goes into the earnings per share. Adjusted, we'll call it non-GAAP earnings per share, where you add back the stock-based comp. So for this year, meaning 2022, I've got adjusted earnings of 440, and off to the right, you can see where consensus is. So consensus for this year right now is at 414, and the big difference is the volumes. The street's at 1.357 deliveries, and I'm at 1.4, because I'm assuming both third and fourth quarter are going to be big quarters as Berlin and Austin come on. And look, China is now putting out at, I think it's like 21,000 a week. They're up to 1 million capacity now, the Shanghai factory with the upgrades. So where I think there's going to be huge, we'll call it beats, is third and fourth quarter. Fourth quarter more than third quarter, because the volumes are just starting to explode. And that really becomes apparent in 2023. We're going through that same process you just went through. I've got 2.4 million units because I've got Berlin and Austin really coming on stream. I know Elon has predicted 5,000 a week by the end of the year. I've got 3,000 by the end of the year. But then when you go all the way over, the street's at 2 million. And I don't know if it's because they're just not assuming much Cybertruck, or they're just assuming that, Berlin and Austin continue to lag. But I've got $8 in earnings for next year, and the street's at 583. So when people say you're being really conservative, the only place they could say I'm being conservative, I think, is on the auto gross margin. And we've had a little debate in the last couple of days. Some people saying that number is going to be much higher. It's possible. I'm just looking at the two factories, and they're at 25% of capacity right now. So it's hard for me, and these are the quote unquote money furnaces that Elon talked about. It's hard for me to get my margins anywhere near, 35, 40% with those two factories still operating at 25% of capacity. I don't think I'm being too conservative. Again, if I look at my numbers versus the street, I'm at $8 versus 583. If they were ranking me, I'd be up near the very top in terms of earnings. But I know there's some
but you're talking to us, so compared
You
to
know
all
what's
of us.
funny? I'm looking at my model, and he's got more deliveries. Gary's got more deliveries than I do through 2025. So don't call him conservative.
It's the
more
auto
conservative
gross
than Gary.
margin where, I may be conservative. If I look at my numbers versus the street's at about the same as I am on auto gross margin. And again, I back out the reg credits. So I don't know, maybe some people are including the reg credits in there. I just assume they're going to go away as everybody else now has EVs. They don't need to buy the reg credits as much.
Let me ask you a question. So these percentage numbers in this column of deliveries, thousands of deliveries. So this year 1.4 million, next year 2.4. These are the percentage increases. So you believe next year with the ramp of the two companies, they are able to increase it by 70%, but then it goes down to as low as 29%, and your average, if I got it right, is 44%, right?
Right. So it's the law of large numbers. So look at that second column. EV adoption this year will be 10%, and so I've got it. And this is the investment thesis on Tesla, that as EV adoption grows from 10% this year to about 30% globally by 2025, and I do it by region. So you got China, you got Europe, you got the US, and you got all the others. That's about a 44% growth rate. The investment thesis is column 4, which is Tesla can hold its EV share. Okay. And that's what Apple did with iPhone because they can outrun the competition. I think the bears, and maybe this is Moody's as well, but the value guys and the bears will say that's nonsense. As everybody else launches their own EVs, Tesla's EV share is going to fall. And so some people point to the second quarter. The number in the second quarter for EV share was about 16.5. But remember, China was closed because of COVID. So when you add that back, and I had this discussion with Rich at dinner, I said, when you add that back, second quarter EV share was about 20%. When you add back it was like 80,000 of lost volume in the second quarter because the China factory was closed. So I still believe as long as you can keep track of this number, and it's pretty easy to keep track of the number, as long as Tesla can keep their EV share at about 20 by innovating, and more importantly, they have to keep adding factories. So we need to see that they're adding another factory, whether it be in the UK or in Canada or in Indonesia. They got to have at least a factory or so a year to get to 10 to 12 factories, which is what Elon promised by 2030. And again, what Elon has said, 20 million units by 2030. Look at my number, which is column
10.
10. I'm at
10.8. Yeah.
Because that's 1.1 million per factory. Elon's saying 10 to 12 factories, 20 million. That's 2 million EVs per factory, which is huge. So I just think that's being a little aggressive. And I know he says that's aspirational. That's the word he uses. I just think those two things need to happen. EV adoption needs to keep growing at the rate it's growing. And I'm pretty confident of that. What I'm not as confident about is Tesla needs to keep adding factories at 1 to 2 every 2 years to get the capacity up so that they can actually get to that number by 2030.
So would an expansion of Shanghai, meaning, and I think Shanghai we're limited in space, but especially in Austin, we can still add 3 or 4, even more times the same thing. Would that satisfy your need for that? Because I just think logistically it's much easier to double, triple, or quadruple a site that you already have than now suddenly go into the next state and start all over again.
It is, and if they'll do that, I'm fine. I don't care. I'm okay if they just triple the size of Shanghai or triple the size of Austin, which they have the space to do. Obviously, there's no room in Fremont to do that. But I do think from a logistics standpoint, there needs to be something in the eastern United States, whether it be Toronto or it's called Kentucky or Pennsylvania, and there needs to be something in the UK, on I guess we'll call it the western side of Europe, and then I think there needs to be something over near India, Indonesia, Thailand, that area. So I can see those as the low-hanging fruit in terms of getting new factories up and running. I think that back to your original question, why is the growth rate slow so much, is because once you get to 30% EV adoption, so look at 2025 versus 2030, going from 30% to 60%, if you were to calculate the compound growth rate of that, it's not that big, right? Because you're getting a big number. You're basically, going from 10 to 30 is a triple, going from 30 to 60 is only a double, so the compound growth rate is going to be lower. So I don't
Because
want to
what
assume.
you're doing,
What's
what
that?
you're doing is you give them the credit the next 2 or 3 years that they will grow as they promise, but then you slow them down. I think you just have a doubt that they might get really to 20 million by 2030, and that's why your growth rates here I'm not in the right here of 29% and 24% gets so much lower, right? Just because you think there won't be enough factories to really build 20 million cars.
Well, here's the math. Look at that EV adoption, because that's the key assumption. From 2022, I go from 10 to 30, okay, in 3 years. That's a 44% growth rate. Just take my word for it if you
Yes.
punch that in. Going from 30 to 60, 25
It's
to 30,
doubling.
that's a double over 5 years. That's only a 15% growth rate. So the problem is you can't just keep assuming that Tesla's going to grow its EV share. That's why the growth rate has to slow, unless you want to assume you could say the industry is going to go to 90% EV adoption by 2030, and you may be right.
But don't you feel bad giving them so little PEs? I mean, I know now where it comes from, but I just find it absolutely ridiculous imagining that in 4 years Tesla would trade at a PE of 13.
That's my bull case, Alexandra. So I'm not saying that they're only going to trade at 13 times. I'm just saying if the stock price stayed at 275, they outgrow the multiple.
Oh, I see.
And so
Okay.
the right way to think about this is go to 2026, let's call it, and say, if they're growing at, let's say, 20% a year, what should the multiple be in 2026? And I would argue with a 20% growth rate, you may say that's too low, but let's suppose it's 20, they should get a multiple of at least 40 in 2026.
Exactly.
So 40 times 2067, assuming my earnings number's right.
Okay, got it.
That's it. And then you have to discount it back at some, cost of equity reflecting Tesla's beta. And this is where people get a little sideways with it. There's an interest rate, and the interest rate keeps going up, right? Because the Fed is tightening. Yeah. So now I'm using a 3% 10-year rate. There's what they call an equity risk premium. So how much do equities in general return versus bonds? And over the last 60 years, it's been 6%. But then you got to multiply that times the beta. And Tesla has a 1.6.
1.6.
You have to adjust it for the riskiness. So the discount rate that I use for Tesla, which people give me a hard time for because I use a high number, it's 12.6%.
Yeah.
The 3.
It's severe. It is really severe what you're doing. Yeah.
Right. Severe. Okay, that's a nice way to put it. But that's the way, financial people look at things. You have to risk adjust things. So even if I do that, I'm still getting a $550 price target. So go to the street. The street is only using 892 by 2026 off of Bloomberg. I'm at 2067. And I get that, people say, well, you're too conservative because you're not including any earnings for robo-taxi or insurance or this and that. A fair point. But I'm so far ahead of the street that if my numbers are right, the stock is going to be double, where it is today if my numbers are right. And so a lot of people say,
and yours is a 6 to 12 months horizon, right?
So that's the way price targets are. When somebody says to an analyst, and I grew up as a research analyst, what is your price target? You're coming up with a valuation, assuming markets are going to be efficient, and figure out what within 6 to 12 months. So when people say, well, you've already been at 550, again, it's a split adjusted number for 6 months or 3 months. Now you only have 3 months left, so you should be raising your price target. I say that's not the way price targets work. Price targets are there's a present value based on some future value discounted back. And the assumption in an efficient market is the market will figure out what within 6 to 12 months. So that's how you come up with a price target, okay? And that's the easiest way I can explain it. It doesn't mean that I'm smarter than the market. It just means I'm looking for market inefficiencies. And I think here's where the market inefficiency is on Tesla. EV adoption is going to grow much faster than everybody thinks. And Tesla is going to be able to hold its EV share. And therefore, 20%. It's going to earn twice as much as what the street is at in 2026. And that's the market efficiency. But the market will figure that out over the next 6 to 12 months. And that's why I have a price target over 6 to 12 months. Does that make sense?
Love it. Yeah, it does. Now, that brings us to our headwinds. Hope we're not losing.
Can I ask a quick question, Alexandra, just real quick? So what kind of signals, I'm just curious, because the way I view 20 million in 2030 is that, so that chart was very helpful for me to sort of put within my own brain, how I think about 20 million is that Tesla's entrance in the robotaxi market and the way that I described it, I think it's the lever they pull to really get their units up to that, because I view it as a way of just completely, 2030 is 8 years from now. And what I've seen from the company is that these folks are thinking 5-10 years ahead to try and reshape what the market's going to look like. So I think that's how they get to 20 million, is by introducing a brand new a product that's going to address a brand new market. But I'm curious, from your standpoint, Gary, what would you look for to see if you can get to 20 million from your perspective? Like, are you looking for anything specific?
Well, I'm looking for them to hold their EV share, number one, which I think they can, as long as they keep innovating. And Cybertruck is going to help a lot, because I always go back to TAM. With Model Y, they went into a category, CUVs, which is 40% of the market. So while a lot of Tesla, remember the bears were saying Model Y is not going to do much of anything, they basically tripled their TAM when they introduced Model Y. Now with Cybertruck, pickups are about 18% of the market. If you look at the TAM, according to Wards and others, that's going to be a huge increase. I mean, not as big as Model Y, but it's a huge increase in TAM. The other big missing link, it's not semi. Semi is going to be a limited volume. Is we'll call it the $30,000 to $35,000 segment, which Tesla doesn't compete in. And I understand people say, look, they don't have the capacity right now. That's why I don't assume anything in my model until 2024 with that. But that's the next big piece that expands the TAM. And while it will cannibalize Model 3 a little bit when they introduce it, it's something they have to go in if they want to continue to keep their share, because that's where everybody else is going to go. They're all going to bring out $30,000 to $35,000 EVs. So hopefully I need to see that. And I need to see that they keep adding capacity at the rate of 1 to 2 factories every couple of years. And if that happens, they're golden.
Yeah,
that's why it's our largest position. And look, we believe what you said, as far as that, they've shown an uncanny ability to execute, whereas the rest of the industry has not, and produce at scale. As Elon said, prototypes are easy, manufacturing's hard. They have shown that they can execute. All they got to do is execute. All they got to do is open more factories and get the product lineup that they've already announced. So Cybertruck next year, and we'll call it the $30,000 to $35,000 compact by 2024, 2025, and they should be able to hit that $10 million unit number by 2030 that I have.